Welcome back to The Explainer. Today, we're digging into the latest financials from Tai Holdings. And let me tell you, they dropped one number in their recent report that was so big, it just made everyone stop and stare.
Yeah, you're seeing that right. 300%. That's a 300% jump in the profit that goes back to shareholders. I mean, that is just a massive leap, right? So the big question is, how on earth did they pull that off? Let's get into it.
Okay, so here's our game plan. First, we'll look at that headline profit surge. Then, we'll figure out where all that money came from by decoding their revenue boom. After that, we'll give the company a quick financial health check, see what's on the horizon, and then wrap it all up with the key takeaways you're going to want to remember.
All right, first things first, that massive profit surge. Let's really put that 300% into dollars and cents. In the same half-year period last year, Tai brought in a profit of about $10.1 million. Pretty solid. But this year, whoa, they hit $40.3 million. That's not just growth, That's, well, it's an explosion.
And here's what's really wild. This wasn't just some accounting fluke. I mean, look at these numbers. Revenue more than doubled. That alone is pretty great. But the operating profit, wow, that's the money they make from their actual day-to-day business. It shot up by over 560%. That is just incredible.
So let's decode that revenue boom. When you see a jump that big, you've got to ask, where did all that cash come from? Which part of the company was firing on all cylinders?
Well, the answer is pretty clear when you look at how they break down their business. You really don't need a finance degree to see what's going on here. The development properties part of their business, that was the absolute powerhouse.
And this chart just makes it crystal clear, doesn't it? I mean, property development didn't just do well, it left everything else in the dust. We're talking over $231 million from a segment that brought in just $64 million the year before. That is a phenomenal jump.
So, you're probably wondering which projects we're talking about. Well, the company points to two key residential developments in Singapore that really drove this growth: Rivergreen and the Lake Garden Residences. And you know what? It wasn't just about property. Tai also has investments in other businesses, and those did really well too. The big one they mentioned was their share of Uniqlo's success. Turns out, strong sales for the retailer in Singapore and Malaysia gave Tai's bottom line a nice little boost. Okay, so a massive profit jump is obviously great news. But if you're an investor, you know that's only one piece of the puzzle. The real question is the company itself built on a solid foundation? Is its financial health strong? So for that, we need to do a little corporate health check. And the best place to look is the balance sheet, or as it's officially called, the Statement of Financial Position. It's basically a snapshot of the company's financial health. And right away, one number just jumps off the page: the net gearing ratio. I mean, look at this. They managed to slice this number in half in just 6 months. It went from 0.29 down to 0.14. For an investor, seeing that is just a huge, flashing green light. It's a fantastic sign. So what does net gearing ratio even mean? Well, the easiest way to think about it is like your own personal debt-to-income ratio. It's just a measure of how much debt the company has compared to its own capital. So by cutting that number so dramatically, Tai basically just told the world they're a much lower financial risk. And how they do it? It was a really smart, powerful combo. For one, they paid off over $300 million in debt, but at the same time, their cash pile actually grew. And that double whammy directly pumped up the net asset value, which is the underlying value of every single share.
All right, so the company's finances are looking super strong. But what about the bigger picture? What's the environment they're operating in? Let's look at the risks and opportunities ahead.
And for their main market, Singapore, things are looking pretty good. The company's report points to a few really positive signs. Property prices are up, sales for new private homes jumped a lot, and the whole Singapore economy is humming along nicely. For a property company, those are some seriously strong tailwinds. But of course, no business is without risk. The company is pretty clear-eyed about this in their report. They know that things like the overall economic outlook and shaky financial markets are always out there, and something they have to keep an eye on.
Okay, we've covered a lot of ground, so let's wrap this up and distill it all down to the most important takeaways for an investor.
So here are the 4 big things. 1, an absolute explosion in profit, thanks mainly to their property development arm. 2, a huge surge in revenue from those key Singapore projects. 3, they seriously cleaned up their finances, cutting their debt risk in half. And 4, they're doing all this in a strong and growing Singapore property market. It's a pretty compelling story.
And that really leaves us with one big forward-looking question, doesn't it? With a super strong balance sheet and a booming property market, Wing Tai looks like it's in an amazing position. So, the question is, what's their next big move going to be?
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.